What's going on, guys? Hope you're having an absolutely fantastic day. So today I want to talk about short selling, right? And after taking a look at articles like this, it's not hard to tell why some people would want to go and short sell, right? So the short selling cohort has gained 114 billion in January mark-to-market profits as of Friday's close, up 11.6% for the year, according to data from three partners, Iho Dusenuwiski, or I can't pronounce his last name. But basically, okay, after seeing an article like that, and you can see that this is in January 2022, right? And since then, the markets have just deteriorated from that, right? So let's just take a look at short selling and what is a short selling and what is pros and cons of short selling, right? So short selling is an investment or trading strategy that speculates on the decline in a stock, right? So most of the time, going long means you're hoping the thing goes up, and going short means you're hoping the thing go down, right? So in a stock or other securities prices, it's an advanced strategy that should only be taken by experienced traders and investors. So this part I do not necessarily agree, because at some times, like Bitcoin at 69k or Bitcoin at maybe even 50 60k, right? That was a easy time to say that, yeah, I'm going to short sell Bitcoin, because the reasoning is because like there were meme coins popping out left and right. Shiba, 20 billion market cap. Dogecoin, like 30 40 billion market cap. So at that time it was rather obvious, right? So I wouldn't necessarily agree that it's taken by only professionals, right? But I would say that it takes a lot of patience, right? Because things like that only happen maybe once every 5 years, right? And those obvious opportunities, right? So traders may use short selling as speculations, and investors or portfolio managers may use it as a hedge, right? So that's the important part. They use it as a hedge because they cannot get out of their positions, right? Let's say Warren Buffett, he owns, let's say, 10% of this company. So the moment he sells 1%, right, it's going to move the market down, right? So what does he do? He can buy some options, buy some puts or something. So while he sells and the prices go down, the gains from the puts actually offset the amount that he loses from selling, right? Because the general market will look at it as a vote of no confidence or something like that, when people may just be trying to trim their positions or redeploy capital, right? Speculation carries the possibility of substantial risk and is an advanced trading method. So hedging is more of a common transaction involving placing an offsetting position to reduce risk exposure, right? So without getting out of the market, you can actually hedge your exposure, right? So, but hedging is not really used in retail investors' portfolios, because if you hedge, right, let's say there's two type of bets, right? There are hedge bets or there are directional bets, right? So if you think stock is going up, right, so you can just buy and you can leave it unhedged, right? The reason they hedge, again, you have to see like the reason for doing something, right? And the reason hedge funds basically hedge is because their capital base is just so big that they can't get out all at once, right? For example, you have, like, let's say 200 Tesla shares or something like that, right? That's already a lot of money, but you can realize that you can just sell it with a snap of your fingers, just like that, right? So it doesn't you don't really need to hedge, right? So if you decide, oh, I don't think the outlook is so good, I'm just going to sell it, so no problem. So in short selling, a position is open or borrow by borrowing shares of a stock or other asset that the investor believes will decline in value, right? So the investor then sells these borrowed shares, and the buyer's willing to pay the market price, right? So basically, you sell the shares or whatever you're borrowing, and then you hope that it goes down and you buy it back cheaper and you return the same share, right? Because what you borrow is actually, let's say, Google stock or Facebook stock or whatever, Dogecoin or whatever, right? So maybe I shouldn't use Google and Facebook stock as examples, because those are phenomenal companies, right? So let's take a look at a big proponent for this, and arguably someone who made short selling famous, right? Which is Michael Burry, right? So Michael Burry basically shorted the housing market in 2008, made hundreds of millions for his investors and hundreds of millions for himself, right? So what happened recently is Michael Burry sold his whole portfolio, right? So he sold his whole stock portfolio, which leads some people to think that he's probably shorting the market, right? Because you don't have to disclose your short sales, but you do have to disclose your long positions if you're in a fund which is over $100 million, right? So let's take a look at why I think most of the time should not be times to short sell, right? So first of all, it's corporate profits, right? corporate profits, you can see over time, let's just say this is just 3 years, right? And you can see over time it's going up, right? And if you take a look at max, this is, I don't know how many hundreds of X's, right? So second thing is inflation, right? So you can see that inflation is at 8.2%. And what happens when there's inflation? Because we short in nominal numbers, right? Let's say we short at $100, but inflation is at 8%. So even if all else remains constant, next year is at 108, right? The same exact real purchasing power, right? So obviously it's not so simple. There's a lot more numbers to juggle. Inflation rates can change and stuff like that, right? But in simple explanation terms, yeah, that's how it goes, right? So if you're enjoying the video so far, do help me smash up the like button, hit subscribe, and also hit the bell button and press on all, right? So this will really help out the channel, and also watch till the end, right? Because obviously you don't want to miss any important information. And if we take a look at one of the most famous short sellers or bears, right? So this is Stanley Druckenmiller, right? So Stanley Druckenmiller is bearish most of the time on the market, right? And most good investors are bearish most of the time on the market because most things are more overvalued than they are undervalued, right? And also these macro investors basically have all the risks in mind, right? So when you have all the risks in mind, it's very hard to be an optimist, right? But even he has admitted that the most of the money is made not in short selling but in going long, right? So the only time to make money in short selling, he has said a lot of the times, is either one, the company is like a useless company, as a worthless company, or a scam or fraud. So, and two is when things go to extremes, right? So these are the two scenarios where it's easy to make money short selling, right? And if we just run some numbers, right? Let's say you start with 100 and you go up 10%, right? This is a scenario where you're going long, right? You go up 10% and you go up another 10% and you go up another 10%, right? You can see that the number that you end up with is 133, right? And if we take a look at the same example, you go down 10%, go down 10%, go down 10%, and you go down 10%. So you can see that the percentage moves are not the same, right? So with that, you gain $33, and with shorting, you only gain $27, right? So you can see how compound interest starts to work for you or against you, whether you're shorting or longing. So on the flip side, I do want to talk about when you should short, right? So in my opinion, you should short at these extremes, right? So let's say you have a view of something that people don't have, right? Let's say you think that Chinese education, they are cracking down. So there were signs before this that they were cracking down. So maybe we didn't realize that it was going to be a full-out ban, right? But they were cracking down before that. So you have a view that, oh, it's going to crack down, or the Chinese government is not going to let this industry live, right? Then obviously you can make 96% short selling. And that's crazy amounts of money, right? And the second situation is when you think this company is a fraud. And the third situation is obviously when you think when we are at cycle extremes, right? So not it's slightly overvalued, or it's I think it's a little overvalued, right? But it's so obvious that we are so far gone, right? So the best example I can still go back to is when there was the Dogecoin and basically the Shiba Inu mania, right? And that was the time where it was quite obvious that everything was in a bubble, right, at that time. So yeah, in my opinion, those are the three situations which I would put out a short position. So moving next on the list is probably Bitcoin, right? A lot of people have said that Bitcoin is down 70%. So maybe we should take a look at short this Bitcoin, right? But basically, if you take a look when it was 69,000, 50,000, 60,000, and there were Dogecoin popping out and there was Shiba Inu popping up, so that was maybe the time to go and short Bitcoin, right? So I wouldn't recommend shorting all those meme stocks which have a low market cap as well, right? Because a bit of FOMO or retail participation can really push up the prices where you are not solvent anymore, right? So as John Maynard Keynes has always said, the market can remain irrational longer than it can stay solvent, right? But something like Bitcoin at the time, maybe it was like a 1.5 trillion market cap, maybe. So that was a possible like thing that you can short with some degree of confidence that it wouldn't be manipulated, right? But what about now, right? Now that it's already down 70%, right? So is it a good idea to short, right? So unless you think that your thesis is Bitcoin is going to zero, then yeah, it's always a good time to short, right? In that case. But if your thesis is not that Bitcoin is going to zero, you can see that the risk and rewards no longer match up, right? At 69K, when there was Dogecoin, Shiba, everything popping up, crazy speculation, then you can realize, okay, maybe this is a bubble, going to pop soon. Maybe either I stay away or I want to short sell, right? If you want to make money. So the next thing to say is that I personally think like Bitcoin will go to 15K, right? But that is just an opinion, right? So it may go to 15K, it may go to 10K, right? But I'm not willing to short at these levels because unless you're taking a very short term, like short position, maybe you want to make $100, $200, that is it's something that you want to gamble or speculate on. That is your own choice, right? But I personally wouldn't be shorting Bitcoin to 15K. So I don't think I'm a messiah. So I don't think that just because I say it's going to go to 15K, it's going to go to 15K, right? It may even go lower than that, but I won't regret not shorting this, right? So another quote to see is that sometimes the smartest thing is to do nothing, right? And again, another quote after that is all of humanity's problems comes from man's inability to sit still in a quiet room, right? And that's very true, right? Because most of the time, we can't really sit still, right? It's very hard to sit still. Our bums get itchy and we want to do something, right? So a good example of maybe why you don't want to short sell and you want to be a long only investor is here, right? With Apple, right? And it's up, but a staggering 200,000%, right? So every dollar that you put in, you get out $2,000, right? So if you take a look at something like that, then you understand that $1 you can make $2,000, right? And versus $1, the max amount you can make shorting is only $1, right? Unless when it goes down, let's say you short something at 100, it goes down to 90, you double your position, right? So then you can make $190, right, at the maximum. So you can see how the numbers are working against you and how inflation is working against you, how corporate earnings are working against you, right? So this is an overview of short selling. If you do still want to short sell or do whatever it is, this is your personal decision, but I'm just laying out the facts, right? So the last thing I want to leave you with is a quote from Warren Buffett, right? What the wise do in the beginning, the fools do in the end, right? So if you're shorting Bitcoin at 60K, 50K, 69K, you are the wise, right? But now towards the end, right? Let's say, I don't know where the end is. It may still be another 50% down. Let's say Bitcoin at 10K. It's another 50% down. And to those people that can catch that move, or those people that can have the foresight to see this, congratulations to them, right? But I don't think I'm in that camp. I don't think I'm so smart, right? So don't be the fools that do what the wise people do at the start, right? Because timing is very important as well, right? And it's quite essential to look at prices, to look at fundamentals and make your judgment instead of, just because something has been going right for a long time and you think that it will continue going that way, right? So the one thing that we know about markets is that markets are always mean reverting, right? So it always goes up and down, right? So it never goes like up straight and never comes down, right? So that never happens, right? So yeah, that's about all I wanted to share today. If you did enjoy the video, do help me smash up the like button, hit subscribe, and also hit the bell button. With that being said, have a fantastic day ahead and peace out.